Welcome to another episode of Banking Transformed, the podcast that dives deep into the trends, innovations, and strategies shaping the future of banking. I'm your host, Jim Marous, owner and CEO of the Digital Banking Report and co-publisher of the Financial Brand. In this episode of Banking Transformed, we have Jeff Horowitz, EVP of Transcard, who will discuss the importance of modernizing the payment solutions for small businesses. Jeff delves into the common challenges small businesses encounter with payment processing, such as high fees, security concerns, and integration issues, and how financial institutions now have the digital solutions they can offer through third-party providers. Jeff also shares his vision for the future of global digital payments for small businesses, highlighting trends like AI, digital wallets, cross-border payments, and even the Internet of Things. Innovation in payments is happening across the entire banking ecosystem. With the collaboration of third-party providers, seamless and cost-effective solutions can now be offered by financial institutions to their small business customers, enabling improved processing and record keeping. So, Jeff, before we start, could you provide a little summary of your career path and an overview of the solutions that Transcard offers the marketplace for those who may not be familiar?
Yeah, sure, Jim. Happy to. And first, let me just take a moment and thank the team at Microsoft, along with Rhonda Stites, who's been leading the charge for connecting the two of us. I've been listening and viewing your podcasts over the last year or so, and some really good stuff happening. So thanks for all that you do.
Thank you.
I won't give you the whole bio on my career, but the majority has been spent in the banking sector. Working here in the U.S. for the last several years, but also working over in Europe and back and forth between markets in Asia, and covering just about every industry segment you can imagine, from corporates, as a banker working with other banks, working with fintechs and technology companies, government agencies, and small and medium-sized enterprises as well, or SMEs as I like to call them.
Yep.
Fast forward, now I'm with Transcard. We'll get into the dialogue a little bit as to where fintechs play in this space. Transcard, we like to think of ourselves as a payment orchestrator. So if you think of an orchestra leader and you think of the musicians, using that analogy, the musicians that we look at are things like businesses, back office processing in terms of their ERP or enterprise resource planning systems, their accounting systems, and we integrate and link into those systems. We're not a bank. We don't want to be a bank. So we also link into the banking systems who clear the payments. And then we look to do it in all payment rails, and not only in the U.S., but also abroad.
Well, you're really a facilitator, and you bring together the challenges that small businesses have with the opportunity that financial institutions can have to solve that. And not just traditional, but non-traditional financial institutions as well. So what are some of the biggest pain points that you see small businesses facing when it comes to managing payments?
Yeah, that's a great question. There are many. I read a recent article in Forbes magazine that cited 33 plus million businesses in the U.S., representing somewhere around half of the workforce. We think of the big Fortune 500s, and they're important, but the small business is really the backbone of the United States. And that also holds true in many other markets around the world. What customers tell us are a few things. First, they're dealing with a lot of manual processing. They may be working off old legacy systems. That's an issue. They're dealing with reconciling information as payments come in, as they look at their supply chain. Who paid me? What was it for? If I'm paying a supplier, there might be some kind of error, or they thought they were getting paid a certain amount, but it wasn't. It goes back and forth. And probably one of the largest, items that we hear, and it's part and parcel to payments, but it really is something that is of a concern. for business owners and for CFOs of small and medium-sized enterprises is access to working capital. Interest rates are high. They remain high. We'll see what happens. But for those small businesses, for the, let's call it the non-investment grade, non-public entities, working capital is an issue for them. They need to make payroll. They need to pay their suppliers. And, the cost of the supply chain is quite high. So those are some of the pain points that we're hearing.
Yeah, and it's interesting that when I was in banking, which is a long time ago, but it even comes up to more recent times, the small business marketplace kind of was squeezed between a consumer and a large corporate player, such as a Fortune 500 company. And what always was a challenge was that there was nothing that really solved for the payment nuances. And especially, as you mentioned today, with so many things, so many small businesses being international, that the international transfer of funds is not just for the big guys anymore. And it's not just for the expatriates or the people that are immigrants to the U.S. or any place in the world with regard to payments. So how do the challenges of small businesses actually differ from the consumer or the Fortune 500 company?
Yeah, so that's an interesting one. In many ways, I'll separate the two. First, maybe consumer and maybe Fortune 500. First, the consumer. Look, Jimmy, you and I are consumers, right? What are we looking for? Immediacy. We want a car, to take us somewhere. We want in minutes. We want a car to pick us up wherever we are. We want groceries, or the drill. We want our food. It should come also in minutes. It seems like even packages come in minutes. Text messaging is in minutes or seconds. So consumers want immediacy. Small businesses have to start thinking that way, when it comes to their customers, but also their suppliers. Now, for large corporations, to answer your question of Fortune 500, problems are the same. Manual processing, reconcilement of payments, access to capital, although they get to have access a little bit better than a small business. The problems, though, are bigger for them. If it's a few hundred payments in a given month, it's a few thousand, maybe millions of payments. You can imagine, right? But they do have some of the resources available. The other thing I'll add for the Fortune 500 large corporations that's different is the supply chain. They're working with the small businesses. And frankly, they've got to get, in my view, a little better at that. And so that's really, I think, where rubber sometimes, hits the road.
So how are third-party providers like Transcard helping traditional and non-traditional financial institutions improve their payment offerings for small businesses that will enable bankers and small businesses to sleep better at night?
Yeah, so let's talk about the banks first, and then let's talk about the small businesses. So for banks in the U.S., I'll keep the context within the U.S. Yeah. I read something years ago, and I just recently, just getting ready for this discussion, was doing a little research. 57% of the balances that are held in banks here in the U.S. are held by, if you had to guess, 5 banks. Top 5 banks hold 57% of the balances. And that probably holds true, and I'm sure it does. Last I checked, it did. Around that, maybe even higher in market share, if you would. And then yet there's 4,000 plus banks that are in the U.S. Frankly, 569, according to the FDIC, failed since 2000, about 25 per year. So banks have to really be careful on how they operate, the way in which they operate, and the manner in which they're competing for business and for, if you would, let's call it shelf space. So for banks, it's really important for them to understand technology and where technology fits into the ecosystem. The large banks have a corporate platform to handle their corporate clients, a commercial platform to handle their commercial clients, and then when you look at the smaller banks, the 4,000 plus other banks that are out there, not the 5, they're dealing with a platform that has to compete against the larger banks.
Right.
So for banks, in terms of what they need to do is really work with technology providers as partners to be able to support their clientele. And then briefly for businesses, really what I try to look at is those pain points and how they should address them. Are they moving, for example, from check to some kind of digital payment? Do they have the means to reconcile if reconcilement is an issue? How are they accessing capital? Are the banks providing the capital, or could there be an alternative means?
Boy, it hits home. So I have a subscription business with my digital banking report. I would get annual payments for subscriptions that people would pay, and they'd get the subscription. So you would think I'd use my traditional financial institution, but they weren't the best source for me. I used PayPal as my payment platform. Also was my payment platform for paying my contractors. But the reason why I did that is, number one, PayPal gave me better instant access to information. So I knew immediately who paid as opposed to a day or two delay with ACH. Number two, they were able to give me a record keeping over a year on who made that payment. Thirdly, and just as important, was the fact that because they held all the data, they were able to offer me instant access to capital, to your point, because they knew my business better than my traditional financial institution. This is not abnormal. In fact, my financial institution is the top 5, 7 in the marketplace. What are we doing? What type of solutions do you bring to financial institutions that help them compete with, in my case, I'm not dealing with a lot of payments, but when I got them, I wanted to have perfect record keeping and instant access for subscribers. What does a Transcard payment platform actually do to make it so financial institutions can act more like the fintech firms that are doing things so efficiently?
Well, first, let me say, I know you're interviewing me, but I'd love to later on in this discussion or afterwards ask you a few questions about how you're doing what you're doing.
Yeah.
Because I have a few thoughts and I'd love to know a little more. But let me answer your question. And thank you for asking about Transcard. And I'll use Transcard as I think, a leading example. Look, I joined up with Transcard at the end of last year, spent my career in banking. So, the folks at Transcard likes to say, oh, yeah, Jeff, you're a reformed banker, aren't you? And I'm proud to be a reformed banker. Now I get to wear this kind of, outfit, and I'm not in a suit, although bankers aren't in suits much anymore anyways.
Right.
So Transcard, what differentiates the platform, and, they've been around 15 plus years. I met Transcard, 7-8 years ago when the bank I was working for became a partner of Transcard. And they run millions of payments, through their system each year. What we've built is a hub. We call it a smart hub. And over the years, it's handled like you just described when you mentioned PayPal and the manner in which you collect funds, the manner in which you pay your suppliers. So Transcard has built a platform to support that, called Smart Collect, Smart Disperse, all in one ecosystem. But what they've done that really does differentiate itself is to link together in an automated way an integration with those back office small business and large corporate platforms, meaning the Oracles of the world, the QuickBooks of the world.
Yep.
I'm naming a few just as examples. There's several that we link into. But we also link into those top 5 banks and many others. And there'll be more that we'll add. We like to call it, in our vernacular, open banking, to be bank agnostic.
Yep.
So they can use whichever bank they wish to use. But the real, I think, interesting area of focus that the company has is to look at that buyer-supplier network and improve that pain point I mentioned earlier for the supply chain. But then you said you have access to capital on your platform. That's what we do. Give them access to capital. If it's a supplier that's, 90-day terms for a large buyer, but they need to be paid like now, in order to handle their working capital. Yeah. Through our platform, you'll have those mechanisms to be able to look at different kinds of terms for payment. So it's all on one platform, one umbrella, and all integrated, rather than many companies and many banks, quite frankly, who work off separate platforms for each one of these needs.
So, you work with institutions of all types, including fintechs and big tech providers that are playing a more and more major role in the payments marketplace because there's so much going on in that space overall between embedded banking and everything else. What innovations have you seen across the entire ecosystem in the last few years that really is making payments better for banks and for small businesses?
I'll give you, in terms of innovation, man, we could talk about that. That's a whole nother podcast, right? But I'll give you two, one more technical and one that's really not technical. It's more in the manner in which businesses should be operating. On the technical side, I'll give you the acronym API.
Yep.
And your audience may or may not know. So application programming interface is what it stands for. The way I like to think of APIs is real-time information that's shared between systems. I go back a ways, so I'll age myself for a moment, but I remember the days of dial-ups. I remember the days before cell phones and before we even had email, right? When I was living overseas, as an example, my wife and I would want to communicate with our family and friends back home. We do it on our email platform, but we didn't want to spend all the money, being online.
Oh, yeah.
So we would do all our emails, dial up for a minute or two, and then we get them back. We do it that way, like a batch, if you would. You're right. Fast forward, now I was in London last week. Touchdown at Heathrow. 10 minutes after I touch down, I'm texting my kids and my wife, back home. It's completely changed. That's what API is now to what it used to be in batch processing, the ability to really, really 24/7 move information from one robust system to another. To me, that's probably one of the biggest innovations that's happened in the last several years. The non-technical, innovation, I would say, is frankly fintechs working with banks. When fintechs first started to become of age, the banking community was a little freaked out. What are these guys doing? And then the larger technology companies started thinking, I can compete against the banks. There was an interesting conversations at various conferences and meetings that I would go to. Now it really isn't that way. It's collaboration. So I think what we're going to see for innovation is fintechs working with banks to solve the problems of small businesses and large corporate.
That's a great point. We try to make that point on this podcast quite a bit, that third-party providers who have a vested interest, in fact, their only interest is in solving specific problems the best way possible and to stay up with change in the marketplace. They're needed by every size financial institution. Small ones because they aren't going to be able to invest, but even big ones who say, we don't want to put all the people on staff to manage what they may see as a very small part of their overall business. They'd rather partner with those whose lifeline really depends on being ahead of the curve. When you look at technology and innovation that's going on right now, what role does artificial intelligence and machine learning and other things along that line work towards improving the overall payment processes for small businesses today?
Yeah, well, as well as once you say artificial intelligence, as well as I do, once you stick those two initials, AI, in front or behind it.
In front of anything. Yep.
Right. It's a whole other conversation, isn't it? Right. So AI, a couple of things I'd say. AI has been around for many, 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 many years. It certainly has, generative AI, et cetera, has really, gotten popular, gotten powerful, for the amount of data that's involved. But let me give you a few examples to answer your question. So where did AI originate in the payments world? I don't know, but I'll tell you when I first, had the experience with AI was, if anyone in your audience knows what a lockbox is, where a check goes to a post office box and then you got to process all this paperwork and all this. It's still around, by the way. Lockboxes are still around. But years ago, AI or machine learning found ways to look at that information, pull out that data, try to see, well, does this invoice look like that invoice? If there's, in the healthcare vernacular, an explanation of benefits, EOB, right? Is there similar kinds of information we can extract? There's a microline on a check. That's always in the same place, right? It has the same character. So how do we pull that information, have machines do this kind of stuff versus people? Jim, that was like decades ago, and that was using machine learning. About 10, 15 years ago, I was working in banking with our wire room. That's a room that really, or a building, that handles payment flows. No one ever sees the wire rooms, what happens behind the scenes. But, millions and millions of payments get processed. But a lot of times, especially if it's a cross-border, those payments get caught up in some kind of compliance issue. The OFAC, if people know OFAC and how compliance gets involved. and they'll stop a payment. Well, machines can learn what they need to look for to be able to take that one first step for looking at those wires. 10, 15 years ago, banks were doing this.
Yep.
But what about today? So today, AI is really taking shape. I mentioned earlier, processing manual payments as a pain point, reconciliation. I'll keep going back to those pain points you asked about, because that's really the essence of this conversation, right? What problems are we looking to solve? Well, so AI now can interrogate payment files, for your company, for example, the last couple of years, and tell you, Jim, have you thought about doing this with your payment stream? Have you thought about going here with your payment stream? There is better payment terms you can have. Maybe there's what they call a supply chain financing vehicle you can use. But the generative AI can actually find that information for you, and also look at various other databases, look at peers, I'm using you as an example, that you have and what they're doing, and bring that to light. That wasn't available even a few years ago.
So with that in mind, and we haven't even gotten to risk and fraud yet with regard to, that's where AI and banking really merge together, because you're looking for patterns, which is basically saying, bad patterns or good patterns. So when a financial institution partners with Transcard, why are they doing that as opposed to building this platform themselves? Why are they using Transcard versus another solution?
Yeah, that's a really good question, right? So it comes down to what specifically within those pain points we're trying to solve for. Frankly, there are some companies that we'll meet with where we'll say, it seems like you're doing pretty good. Keep doing what you're doing. Maybe you want to tweak this or tweak that, so sometimes we'll just come in consultatively and do what I like to call either like a back office review.
Yep.
Where we look at right, you know what that is. Look at their processing. But let me give you a few examples of where companies might, adopt our solutions.
Yep.
It's segment related. And let me give you some real live examples. Maybe that'll help, right?
That's exactly what I'm looking for. That's great.
So there you go. So let's use, we're big, for example, in the real estate space, the insurance space, we're big in transportation. Let me use real estate as an example. Real estate management companies, they have a lot of pain points. They're trying to pay their suppliers. If it's a big investment manager that owns a bunch of properties, it's very decentralized. They want to centralize that activity. So we help them with their supply chain. We actually give them a tool that can have them onboard their suppliers around the world and have a payment of choice. Maybe there's a lot of checks, and we'll do the interrogation up front to see exactly what kind of payments are happening. And we'll help them move from check to some kind of digital payment, and give them reasons as to why they would do that, give them some kind of cost-benefit analysis in doing that to pay their suppliers. Another thing in the real estate industry is, if you've ever had to lease, an office within a building, or lease, an apartment, you put a deposit down, and a real friction in the real estate area is there's regulatory requirements per state around the world, depending on the country you're in, for those deposits. Now the tenant leaves. How do you return that payment? You know what happens today? You probably would guess. It's check. They send checks out.
Oh, yeah.
And, I read recently 21 billion in 2023 in check fraud. So these real estate companies do not want to send checks out if they don't have to. On our platform, they can do it in a digitized manner. They can even pay roommates, 4 or 5 roommates in a college apartment. And the roommates can decide how they want to get paid. It can go right to a virtual card. It could be immediate payment through what's called a real-time payment. So that's just one example in the real estate space. Time for one more, or do you want to move on?
No, these are great because, as I relate to some of the things you mentioned, I had an insurance claim. You brought up insurance. I had an insurance claim a few years ago, and I was amazed that the payment to me was going to come, as you mentioned, by check, which totally blew me away that, you're going to be sending through. There's so many things that can go wrong with that on any angle. And it's everything except seamless and frictionless. So, for instance, you mentioned insurance. Do you help resolve those issues? Because there's so many issues from the insurance company perspective, but also from the consumer.
Absolutely. If you don't mind me asking, I will ask you a question, even though you're doing it. If you don't mind me asking, what kind of claim was it?
Auto claim.
Okay. All right. So let's use like, property and casualty as an
Yep.
example, right?
Yep.
So you asked, where does companies like Transcard and us in particular, kind of fit into the
Yep.
ecosystem. Claim payments are a big one. So thanks for bringing it up, right? So unfortunately, many of us have had similar experiences to yours. So, we put a consortium together a couple of years ago with the big insurers around the country, the big banks. We partnered, frankly, with MasterCard. That's one of our key partners.
Yep.
We said, okay, what kind of pain points we're having, and this is one of them. It was claims, but it got even more than that. It got claims with lien holders. I'm not sure if the lien holder on your car when that happened, but there's lien holders on cars. If there's some kind of funding, lien holder on a house, if there's roof damage, etc. So we've come up as an example with a solution where it's multi-party payments, but using API in the back end. So what do I mean by that? Now, instead of having that check going to you, you can go on your phone, go onto an app, and say how you want to be paid. Now, the adjudication has to take place first, of course.
Right.
But even that adjudication can happen with APIs on the back end. So if the adjudication is XYZ insurer, and it's Jim who's the claimant, and then you have ABC lien holder, our solution actually brings all those parties together through API. So it isn't just the payment, it's all that goes around the payment. And frankly, the payment can be made in minutes, and it can go right to a virtual card, it can go right to your bank account, it can be done in a real-time environment.
It's interesting because when you talk about that, you can imagine just the tracking of the post-tracking of what happened. If you have to unwind any part of that transaction, it's a whole lot easier in the digital world than it would ever be in a world filled with paper. And it's interesting because you mentioned about the advantages you have here, but really what you're doing is you're looking for the ultimate the end consumer, the small business, and making their jobs easier, and the ability to use digital and use advanced technology to build all these solutions. From what you're explaining, a solution like Transcard is somewhat a composable solution. An organization, a financial institution, can partner with you for a specific part of their business that they have a problem with, as opposed to saying, you've got to take over the entire payments process, correct?
That's right. We talk in the vernacular of use cases. What problem are we looking to solve? Where's the use case? The real estate examples I mentioned, the insurance example I mentioned are some of them. There are many others. And when we meet with our banking partners, we talk about, where are you having problems? What are your goals? I was meeting yesterday with one of our banking partners, and they're putting together a new platform to be offered into the market, but they have some gaps. And they're not sure, should we build it? Should we buy it? Should we partner? Yeah. How should we do this? And so we're working in collaboration with them to figure out where could we fit in to solve some of these problems that they're having with their clients.
Do you work with all different size financial institutions or just the largest ones?
No, we work with all sizes around the globe. For the smaller ones, quite frankly, they're going to not, have the ability to work in like an API type environment.
Yep.
So what we might do with them is partner with them in a different way, where we become a private label service provider to them. For the larger banks, we also can be a private label service provider, or we can have that specific use case scenario where we can help them.
Because of APIs and things of that nature, you can integrate in different ways.
Yes, we can. And I was going to say too, we want to be bank agnostic for the direct clients that we have, because we work, our two different channels are working with financial institutions, actually three, working with technology companies, and then working with those end users of a product that a technology company would offer or a bank would offer. But we also want to make sure that if XYZ Corporation says to us, we use ABC Bank, and they're a big money center bank or a small bank, doesn't matter.
Yep.
We want to make sure that we're linked into that to that bank, and we're linked into all the rails that they require. By rails, I mean those payment rails.
It's interesting when you can't talk about payments or transfer of funds without bringing up security and fraud. How does Transcard help financial institutions eliminate the fraud and the security risk with regards to both domestic payments, but also overseas and other types of payments?
Yeah. So the first thing out of the gate we'll talk about, with any counterparty that we speak with is looking at security, looking at how the regulatory authorities, view what we're trying to accomplish. I mentioned the 21 billion in check fraud. So that's sort of the low hanging fruit as I see it. Do you know there's over 11 billion checks that are processed in the US each year still? 11 billion, that's a lot. It's less than it was a year ago, less than a year before that. But so the first thing we look at is, how do you move away from those checks with all that fraud into a digital payment? But let me define that if I could, because I think if we talk about security, people think, some people will think digital wallets. Your friends of mine think that. I don't want to do that. That's a problem. So a digital payment on the front end is really a transfer of value from one entity, if you would, to another. It could be from a business to a business to consumer, etc. But the payment still has to clear. So the idea of digital and the idea of even global, moving global, I'll talk about that in a moment, still needs to require a clearing of a payment. And there's only 4 ways a payment clears outside of check in the U.S. banking system, just 4. It's either an ACH, you mentioned ACH earlier, so automated clearinghouse. It's a wire, which is irrevocable through the Federal Reserve. In 2017 was the first time in 40 years the U.S. banking system came out with a new clearing mechanism called real-time payments.
Yeah,
and it's done through what's called the clearinghouse, or TCH. That's another clearing system. And now, just in July of last year, the Fed came out with another alternative real-time payment through some people know of FedNow.
Yep.
That's it. Those are the 4 ways you can clear pay. Even cards have to go through one of those rails, typically ACH, And so when we look at security, what companies want to really keep in mind is, what is the front end doing, but what happens in the back end? And how is that being regulated? And we spend a lot of time working with our banking partners on this. It's no secret that I come from the banking environment, and now I'm with Transcard. And several other bankers are now with Transcard, as well as technology leaders with the company. So we've mixed together those 2 things.
So what trends do you see as you're looking to forward? What trends do you see from a global payments and the domestic payments landscape that small businesses should be aware of?
So a few things. So if it's a small business that's looking to source overseas versus sell overseas, there'd be a different mix to the answer to that question, right? Ultimately, from a payment standpoint, things are changing really rapidly. According to MasterCard, there are over 70 countries that now have real-time payments, the way I described it earlier through the clearinghouse and FedNow. 70 plus countries. That wasn't the case 10 years ago or even 5 years ago. So now the ability to move money, I wouldn't say in real time, but one of my colleagues likes to use the term near time, is now available in a same day transaction. So when a U.S. company is looking to sell overseas, they might want to think about the platform they're using today. Does it accommodate that? If not, it should. And maybe they should think about a different platform if it doesn't and they truly need to sell overseas. And that platform should be done in real time using the same infrastructure. I mentioned that Smart Hub earlier. Those are the kind of platforms I'm talking about. It isn't just for the US. Then in terms of sourcing, having that feature of a smart finance component to it and a smart exchange component to it isn't for just US vendors. It's also for vendors overseas. High volume importers rely on vendors who sit in China, who sit in Singapore, who sit in Europe or throughout Europe, in the UK, etc. And so you want to make sure that if you're going to be putting those vendors on your ecosystem, you're doing it in such a way that it fits within the platform you have today for the US.
So as we look at all this and all this is happening, obviously you bring a solution through financial institutions that they can offer small businesses. What is the biggest challenge a financial institution has in implementing this more advanced technology system processing? What are the hurdles you see with financial institutions? Did you meet with them trying to sell your services, for instance?
So it's different depending on the FI, the financial institution. If they're a non-bank financial institution, it's a whole nother world because they're not regulated the same way.
Right.
But let's take to the banks who are regulated, those 4,000 plus commercial banks that are regulated. And even beyond the top 5, say the top 25, right? What they're dealing with is 3 general things. There's many things banks are dealing with.
Yeah.
3 general things. One is they're dealing with legacy platforms. And now with the advent, and you mentioned AI earlier, with the advent of AI, the data centers are starting to shift, et cetera, but they're not going to shift off those legacy platforms.
Right.
So how do they adopt newer technology on top of those legacy platforms? That's what we tend to talk to them about.
Yep.
Those platforms, as I say earlier, could support their small business, their consumer, their large corporate. They could be 4, 5, 6, 7 platforms. And we look to integrate into each one of those where it makes sense to do so. For the smaller banks, their issue, quite frankly, is not only competing with those larger banks, but also ensuring that their underwriting can support the small business community in such a manner that is not going to be, creating undue risk.
Yep.
So what do I mean by that? Well, their risk management culture needs to be in a certain vein. So what we do as a fintech is we'll come in and say, okay, so you only lend to this population. In terms of population, what I mean is this, this kind of business, meaning Are they publicly traded, investment grade? Are they below investment grade? Are they privately held? And so what is the risk associated with those kinds of businesses? And we can bring to bear other alternatives, sourcing resources or funding resources to those smaller banks, as well as the payment infrastructure.
Jeff, really interesting. And it's an area that, I was talking to our team, the fact that we haven't really covered this as much, the small business payments marketplace. We did some learning on Transcard before we got on the podcast today, because it's not a brand that I'm as familiar with as normal. But it's interesting because we're looking more and more at these composable solutions that can get financial institutions to do better at serving specific segments of their customers. Small business world has always been, I wouldn't say ignored, but they kind of fit between different entities, and it's really hard to bring the services to bear. Everything from treasury services to payment services to employee relations services, whatever it is, outside and inside of banking. And financial institutions have to get better at this. In fact, we're seeing many more credit unions than ever really focusing on the small business marketplace. And so solutions such as these really open their eyes to what is possible. So I really appreciate you being on the show today, and I appreciate Microsoft for sponsoring it and actually bringing this whole thought process together as to what is possible, and knowing that we're going to probably meet again very soon, because the marketplace is obviously, as you mentioned, changing so fast. Whatever we talked about today is going to be updated 6 months from now.
It will. I'm happy to come back. And by the way, I also want to speak with you about those transactions you talked about earlier.
Those transactions, exactly. Thanks a lot.
I appreciate you inviting me. Thank you, Jim.
Appreciate it. Thanks for listening to Banking Transformed, the top podcast in retail banking, the winner of 3 international awards for podcast excellence. We appreciate your support. If you enjoy what we're doing, please take some time to show some love in the form of a review. On that note, thanks to Jeremy from the UK for his recent review. He wrote, "It is almost impossible to keep up with the changes in the banking industry. Listening to Banking Transform helps me keep aware of how we can improve our customer experiences." This has been a production of Evergreen Podcasts. A special thank you to our senior producer, Leah Haslage, audio engineer, Chris Fafalius, and video producer, Will Pritz.